This week, Ben and I are talking about a tighter supply outlook on the crop market, along with some weather shifts that have occurred recently. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Good morning, Will. I'm doing great. And you?
Doing all right. Post Easter week, or I guess this is technically Easter week since Easter was this Sunday. So, had a nice extended weekend, and I heard you were running around pretty busy as well.
Yeah, we're still kind of, I guess, in extension meeting season. So these cattle producers, they have meeting. I've learned that they have a longer meeting season than what my crop producers do. So, yeah, all's good though.
All right. Well, speaking of all's good, maybe not quite the case within the crop market. A lot of ups and downs, but a quick rundown here. Looking at that May corn contract down 8 cents at 482. December corn up 3 cents at 466. May soybeans down 7 cents at 1035. November soybeans up 6 cents at 1031. Looking at that soybean oil contract for May up 0.51 cents per pound at 47.86. Soybean meal for the short ton down $3.80 at 295.80. Looking at the May 2025 wheat contract down 7 cents at 548. May cotton is up 0.43 cents per pound at 66.32. Rough rice for May down 2 cents per counterweight at 13,485. And then that West Texas Intermediate crude oil contract up $3.07 a barrel at 64.57. So Ben, some spread adjustments on corn and soybeans, along with some other losses kind of scattered throughout the spreads there. What's your takeaway as we kind of saw some of the shift happen this past week?
Yeah, starting to see a little bit of, yeah, like you said, some shifts in those spreads, and certainly it's those new crop contracts gaining on the old crop contracts, and this could be a little bit weather induced with some of the rain that we've seen and or lack of rain that we've seen in some parts of the Corn Belt, and then too much rain in other parts. It's just kind of creating a picture to where that new crop is starting to maybe get a little tested.
Well, before we jump too much into those weather impacts that you were talking about, USDA recently reduced its old crop corn carryout more than what was expected, and this kind of, as some of your commentary alludes to, sets up a market to where as we get further throughout the planting season, those weather scares or weather events might cause larger swings within the market, potentially swings upward if there is severe weather and, kind of challenges getting the crop in or getting the crop rolling. So what kind of environment, I guess, to you does this set up when you're sitting there as a producer saying, hey, this is kind of building to where there could be some market gains in certain areas if there's troubles getting the getting everything planted in okay.
In some ways, this is the dream. I always think that producers are really hoping and banking on some type of weather rally during different parts of the growing season. So that would probably just complete the dream. And don't get me wrong, like we tend to do see some weather scares from time to time throughout the growing season, right? It's some years there's one or two, maybe it's a prolonged rally, but there tends to be at least at some point a weather scare. Now, what was it last year? There really wasn't a whole lot of a rally. We saw a small rally in May when it got real wet and people weren't able to plant, but that was about the only really true window last year in the futures market that most producers saw. Um, to your point about the reduced carryout and stocks to use on the corn side, it's a valid point, and certainly the corn demand has been a very very bullish story for a long time, and we started talking about this probably, let's just say, 18 months ago. You and I started talking about this corn demand just kind of seemed to be developing into a prolonged story of consistent demand, and that's what we've seen, and even this week, we can look at a lot of our domestic demand categories. We can look at our international grain or our international export categories. Corn sales were 61.5 million bushels this week. That's a 2.5 million, or excuse me, 2.5 month high. That's on the sales side of the equation. Then we look at what's actually getting shipped, and Corn exports that were leaving the country at 67 million bushels were above all pre-report expectations. So, this demand side of the corn market, I think, continues to be strong. It led USDA to feel that the data was there to justify a cut in ending stocks because they increased demand. And I think there's a lot of producers that are already questioning the carry out for the new crop. During the winter meeting, I heard a lot of producers say, "Well, we're not going to reach a national average yield of above 180.
Mm.
Let's just say 180 is kind of their threshold. Somewhere even
That
more,
benchmark.
we're going to see it above 179, 179 and a half. So, I think there's already some question about the carry out even for next year.
Well, Ben, looking at the situation that we're sitting in right now, obviously still very early in the planting season. I think USDA's most recent numbers showed corn being 12% planted throughout the country, soybeans less than 10%. Um, but looking at where we're sitting now, in parts of the Western Corn Belt, too wet right now, maybe to get into the field. Other areas kind of missing a lot of that moisture. So, at what point might we see some of these upward adjustments happen as we see maybe planting delays push into May? I know still early season, but something that is the market's going to be primarily watching as a factor.
Sure, yeah, and I'll just kind of give my bias here. As I've spent time driving around both Missouri and kind of the Midwest as of late, I think there's more planted than what people realize. It might not
Hey,
be coming up yet, but I do actually think there's quite a bit more planted, and so uh, I think now some of the questions are going to come in is how do these isolated storms that don't seem all that isolated, they seem pretty broad and big, but just like at the beginning of the month when southeast Missouri and western Kentucky got 12 to 14 inches of rain and it caused flooding. We've seen a lot of rain here as of late in western Missouri and eastern Kansas, and I for people that aren't familiar, the western part of Missouri along the I-49 corridor, there's quite a bit of cropland anymore. There's been a lot of land transition to cropland in the last few years, and that area received 7 inches of rain over the weekend and it caused some flooding. And so I think now the question becomes is and let me back up. There always is these isolated events. Last year, if you remember, it was hail in Nebraska, right? We had that hailstorm, and everybody was trying to figure out, okay, is this every acre of corn in Nebraska? Is it a small amount of corn?
yeah.
My point here is when we have these isolated events, is trying to determine how big of an impact it has. Sometimes we don't know for a while, and certainly with some of the flooding that we've seen early this month, and then here as of recently, how much corn will have to be replanted.
Yeah, well, and it kind of also reminds you maybe of the derecho issues Iowa saw a couple of years ago as well. But shifting gears into some reports here, looking at the National Association of Oilseed Processors. Well, jumble those words around, but the NOPA, the National Oilseed Processors Association, increased their crush numbers, but still below expectations, but well up from the down February report. So, Ben, we're seeing those crush numbers come back a little bit. Is that providing some, I guess, support into that soybean complex as you see it?
I think a little bit of a breath of relief is how I would categorize this. And you're right. Below expectations still. It was in the range, but below the average expectation. However, almost 15 million bushels higher than what we saw in February. And some of that was there's, some weird calendar days, right? I'll remind folks that there's 28 days in February, there's 31 days in March. And so, a few extra days to crush a little extra soybeans. But February really was kind of a disappointing month in a lot of respects. And so it was nice to see, the soybean crush come back. It's not just the crush that we're interested in, it's also how well we're using those products, right? And so when we take the soybean oil stocks number and kind of back out how many bushels we crushed, we can get an implied domestic use. And we used 2.3 billion pounds of soybean oil during the month, and that's a very strong, solid usage for the month. So I would sit here and say, the crush number came back and was relatively supportive, and then that soybean oil just kind of justified it as well. So at the end, this is a category to where there's been quite a bit of discussion around with the lack of biofuel policy, and I've talked about it too. But the lack of biofuel policy and clarity, would there need to be some reductions to the annual soybean crush number? And where we sit today is, we're well ahead of where we were this time last year, because November, December, and January were such large crush months. So we built ourselves a nice little cushion, but it would be nice to keep that pace if we possibly could.
Yeah, well, Ben, kind of going off what you said there, we seem to be moving at a breakneck pace to close out the year and then to start, in this January, and then February was just such a screeching halt of crush production there. So you hope that the market can, pick that back up and then absorb that. But that's also, going to be kind of interesting to watch as we move forward throughout trade discussions with foreign partners here. But Ben, looking forward at the rest of this week, what should farmers and ranchers really be paying attention to that could move the markets? Maybe anything on some of these outside crops that we haven't really hit on too much today, looking at wheat, cotton, rough rice, and any other areas.
Yeah, it's kind of a relatively quiet week. It always, you get towards the end of the month and things kind of quiet down a little bit. So, quieter week just from the broader reports. As it comes to some of these other crops, I think, for cotton and rice, I'll be curious to see how planting conditions evolve in this next week. Again, they were in that prime region that saw a ton of rain, especially for the Arkansas and that Delta region along the Mississippi River. They were amongst all that flooding that we saw earlier this week. So I'll be watching for that. And then the winter wheat conditions ratings, a lot of the hard red winter wheat out in western Kansas missed all this rain this weekend. It pretty much formed at like Wichita, and we needed it about another 200 to 300 miles west to really benefit that hard red winter wheat crop. So missed out on that, and I expect some further deterioration in Kansas, Oklahoma, Colorado as we look ahead.
All right, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about what we do, you can check us out online at brownfieldagnews.com. There you can also find our sister program, the weekly livestock market update. Ben, thanks again. I'm Will Robinson on Brownfield.